idea of a short squeeze in crypto. So we can assume that could be the case, but we're going into a very, very interesting tale of events throughout this week. Hold on a second. What is going on here? Is this thing working or not, ladies and gentlemen? Can you hear me loud and clear? I do hope so. No, it should be. There we go. Happy days. Sorry about that. So, yeah. The idea is that most of crypto is feeling optimistic about Bitcoin. And I'm going to break down to you the reasoning why, okay? And we're going to try and understand if it makes sense or not. Now, this is really important because in last night's live stream and yesterday's live stream, we were talking about why we need to focus on the Japanese yen and the relationship it has with the dollar and what's going on macroeconomically speaking in the world to suggest if investors are on the flavor of risk. So by the time we're done with this live, you're going to have a good idea of how to really approach this coming week with all the news that's coming out. Now, today we do have Powell speaking at 2:30, and that will be followed by the Jolts job openings report, which comes out at 3 p.m. So, yes, Forex girl, no trading for me. I'm not trading until all of that is done, nipped in the bud. Okay. Now, with Powell speaking, I don't think he's going to be talking too much about the economy while he's talking with bankers and what have you. So the market's going to be paying attention to what he has to say. But what's important is the Jolts job openings. Okay. And what I'm going to do is just break it all down for you so you have an understanding of how to really approach the day once the news is over and how we can prepare ourselves for the rest of the week. So if you are new to the channel, mad love and respect for passing through. Be sure to like and subscribe at the end of the live stream. Hopefully you can take some value from this and go about your day. So let's get with the program, ladies and gentlemen. Let's have a conversation. So this is what we're talking about. As it stands, European stocks drop on rates outlook. Now, if we just quickly go over to the news itself, we had the CPI data come out for the euro, came in at 2.9%. Projected it to be low, but it came in line with what it was last time. And if you can see here, the flash estimate came in at 2.5, so it was even, but it was less than what they had in the previous month. Now, that's good news for the euro, but Lagarde, who's speaking shortly as well, they're going to be looking for clues as to whether or not they're going to decrease the interest rates even further in the euro. Now, why is this important for you? Because if the euro decreases its interest rate, it means that it's not so much lucrative anymore to be invested in the euro. Now, the impact of that, as you can see, if we just go into the article itself, you're going to be seeing this sort of tone coming into play, all right? So they've actually just updated this. Hold on, have they updated this? No. This was the yen drop. Yeah, it's this one here. No, they've changed it. Okay, they've changed it. So the last article was talking about the idea that European stocks are starting to show signs of rolling over. Okay, now remember, the dollar dominance is still a problem for us. And even going into this article right here where we can see stock futures fall in run-up to Powell and Jolts. Now, what's the importance of the Jolts openings? The Jolts tells us how many job opportunities are available for people in the US. It says number of job openings during the reported month excluding the farming industry. If we do get a reading higher than 7.96 million, that's going to be favorable for the dollar, not so much for data in terms of the Fed, because then the Fed's going to be thinking, hold on a second, man, there's still more job availability for people, which can encourage people to spend more money, demand more in wages, putting pressure on companies, and then thus involving more of a price increase in goods and services, which naturally will have an impact on inflation. So how's the Fed going to get this done? But we look at it and we say to ourselves, well, if the reading does come in lower than what they are projecting or at what they are projecting, it will be deemed as a negative reading. The logic would say that we would expect the dollar dominance to come down because investors will be saying, yeah, baby, that's going to be good news for us because they're going to be cutting the interest rates because the data is suggesting, okay? But the Jolts job openings, as much as it's an impactful news announcement, it doesn't really carry that much weight in comparison to the ADP non-farm employment change, the unemployment claims, and of course, the non-farm employment change on Friday, NFP. Now, the unemployment rate is due to come out at 4%. If this increase is more than 4%, it goes to 4.1%, that's going to be wonderful news. And then the idea of a September rate cut will be something that we can take into consideration for the US. I'm telling you now, the Japanese yen will only move when the dollar moves because they're not going to try and advertise a Japanese bond when you've got such positive yields on the US dollar? If I just go over to this and show you what the bond auction was like for the Japanese yen, look at this. Going into last night over here, it says, where is it? Here we go. The 10-year bond auction. The reading was at 109.3.2, okay? And then you had a 105.3.7. The figure you want to pay attention to is the 3.2. Why? Because that's bid to cover. Where's the interest? And if no one is bidding, that means no one is buying. And you can see the reading at 3.2 in comparison to what it was at 3.7 is suggesting that there's not really that much interest in Japanese bonds. Why? Because they're favoring the dollar dominance. Man, NASDAQ, you piece of funny person. No way. Quickly go over to the bonds market. You can see 2-year yield, 4.7%. Forget this little drop. That's nothing to be worried about. 10-year yield coming back down to 4.4%. Again, it's still more favorable to be in dollars. Okay? Now, let's get to the nitty-gritty of what we're talking about. How does this make sense for Bitcoin? All right, so with the understanding of the impact that the dollar has globally, and of course, the impact of euro wanting to cut their interest rates, it means that the dollar will still see strength if euro keeps on cutting its interest rate because there's no more yield in euro or lucrative yield holding euros, okay? So those of you that are trading euro or those of you that are involved in trading the DAX, which is the German exchange, pay attention to that because whatever Lagarde's going to be talking about in the next 20 minutes or so, you're going to see some volatility on that, on those asset classes. Now, let me just draw your attention to this story here. History suggests that Bitcoin is poised for a rebound in July, all right? Now, they are basing it on a number of things here. So we've got here Bitcoin monthly returns, okay? Now, you can see historically that when it comes to July, we do actually have a decent time. If you look at the actual increases against the corrections, you got 9.6% in 2013. But look, before we actually consider this data, all right, people will look at this and they'll say, we expect Bitcoin to perform well in July because from 2013, they're averaging to now, 2024, they're averaging of a gain of around 7.42%, roughly, okay? A gain, right? So people are making sense of that and saying, yeah, so we're expecting Bitcoin to go up, right? Okay, cool. But 2013 was a different time, right? 2024 is a completely different time. We've got adoption in cryptocurrency. I mean, we've got Bitcoin ETFs coming into play. So that's great news itself. And I think that people do have a good idea of what cryptocurrency is about. It's just not enough people are endorsing it or having faith in it because you're going, what the problem that we've got here is you've got Wall Street using Bitcoin as a store of value. And bear with me on this one, right? And it's open to debate, okay? But I think that you've got Wall Street that's using Bitcoin as a potential store of value because of how expensive it is. And then you've got more people that are in crypto already trading cryptocurrency. And then you've got people outside of that who don't know about cryptocurrency trying to get to terms with the idea of using Bitcoin as a means of payment. Because that's what your mum and dad investors are looking at. Wall Street will endorse the mum and dad investor and say, invest in Bitcoin because it's going to be very popular. It's another form of currency. But people outside of that, so outside of Wall Street, outside of people in crypto, they're going to be coming to crypto and saying, hold on a second, well, I can spend money with this. I can actually buy coffee with this thing. And the only way that we can really get cryptocurrency going or Bitcoin going is vendors actually start taking payments with Bitcoin, all right? Look at Ferrari. They're offering you can buy a Ferrari now with Dogecoin, all right? You can buy Teslas with Dogecoin and what have you, all right? So it's getting people to think about how to spend cryptocurrency. And in order for them to spend it, they need to buy it. The guys in Wall Street and crypto, they're only interested in the spread. In other words, how high it fluctuates, can I make a profit off that? All right? And that's the question I've got for you all. How many of you actually use your Bitcoin to pay for things? Because if you guys ain't paying for it, and then of course you're just retaining it because they're telling you to hold on to it. All right? Bitcoin's going to end up getting to a price point where people ain't going to be bothering buying it. And that's the crazy thing about it. Wall Street would have successfully actually created the store of value that it wanted to create with Bitcoin. You have a $200,000 Bitcoin, all right? Well, go and look at Berkshire Hathaway. That stock's over $650,000 a share. That's a store of value for me. You got a couple of million that you want to just quickly put into stock and get a dividend off, go put it over there. It's not going to be going down aggressively, and it's very lightly traded because the players that are trading it are pretty much holding it, you know? So that's really what goes into my mind when I think about it. And here's the chart that they're basing the assumption on. Check this chart out. So, bottom in June 2018, followed by a quick 50% move. Happy days. Bottom in June again, 2019, quick 85% gain. Happy days. Followed by a quick 40% gain, bottom in June. Quick followed by a quick 140% in June. That was 2021. All right. Summer up. Summer corrected. Summer aggressive move to the upside, which was fueled by the ETF. All right. Just look at where we are right now. People are using this idea that summer is going to effectively bring Bitcoin to the upside. Well, there's nothing wrong in assuming that. But let's just understand where we are again in the world, because we've got a different kind of play right now. They're talking about Mt. Gox, but Bitcoin adds new pressure. So they're going to be selling 8.5 Bitcoin to be paid back to creditors, but they're saying that it's actually going to be done with 4 billion set to hit the spot market. That's nothing. 4 billion ain't going to be moving Bitcoin as much. All right. And then you've got that's pretty much all they've got. And the plus on top of that, you've got Germany, moving $150 million worth of Bitcoin into exchanges. You've also got the US government that's just recently sold 240 million Bitcoin itself. I guess it's going to be a case of where's the pressure for Bitcoin, or should I say, is there enough people wanting to hold on to the Bitcoin? Okay. Then there is people buying it. Now, remember, we look at things a little bit differently when it comes to buying and selling in cryptocurrency. All right. So let's make the assumption that Bitcoin is due for a rebound in July. Go into the Bitcoin price action just to understand that logic, okay? Look at where Bitcoin is. Now, let's just go over into the daily time frame and just discuss exactly what we were talking about a few days ago or last week about the Bitcoin trick shot. Now, the Bitcoin trick shot was that investors who see this behavior here are going to be assuming that Bitcoin is going to repeat it. And it sort of has repeated it, with the exception that we haven't got this big pump to the upside just yet. Okay? Now, this is what could trigger the short squeeze. Now, the short squeeze in principle would mean that the short sellers are going to get liquidated. And there are various points in the chart that we could make the assumption that they could be coming back into. But look at the hybrid system. The vector candles have already been recovered on the daily time frame. Look at the violet vector candle here. It's already been recovered. See that wick? It's been taken. Done. And then you've got this area here. It's already been taken. The only vector candle that has been left behind is this red vector candle all the way over here around the 70,000 zone. So as a holder, you want to say to yourself, well, what am I looking to actually profit from? If I buy Bitcoin now, will I be satisfied with an 8 grand move to the upside and sell at 70? Looking at it, you might think, yeah, maybe that could be something that I could do, okay? But what about the bigger picture of things? Just because we've seen historically Bitcoin make these gains over each July over the last 10, 15 years or so, okay? Does it mean that it's going to actually happen, all right? Because when we look at this chart right here, the only thing that really impacted cryptocurrency, or the big thing for cryptocurrency, was COVID. That was really the biggest thing. And Bitcoin came all the way back down towards this 12, 16,000 region itself. COVID actually smacked Bitcoin. And then, of course, coming out of it, happy days, it ended up becoming the biggest rally to the upside. And they took out the all-time high, happy days. Now, the next big thing that's coming up, ladies and gentlemen, is, of course, the Fed pivot, which is what we're looking for. And September seems to be the word that says that we're going to get an interest rate cut. You've got the election coming up in November. So it's all like, bloody hell, we didn't have that before. Bitcoin's all-time high before wasn't fueled by no election per se, okay? But we only had a war. And economically speaking, things were great in the US. The US was economically expanding like no tomorrow. And then, of course, it hits the highs and then it comes back down again. But we're in a different scenario right now, which makes me question if how long will July's hopeful move to the upside sustain itself, which then takes me back to the idea of this. Bitcoin has got two areas of interest. The first area of interest is down here. That's at 58,449. And then you've got this area down here, which is 56,597, which could lead to a third area if we're focusing on it, which is this vector candle zone right here, which is why some analysts are calling for Bitcoin to go down into the 50 zone, okay? In my opinion, the 50K region would be the absolute low for Bitcoin to suggest the interest from the bids. This is Bitcoin on the 1 hour time frame. I'm not really seeing the bids coming into play. Neither am I seeing the actual offers coming into play. But I know that there is interest all the way down here. And what we were looking for was that big order, which happens. Oh, no, that's on Ethereum. Wait, let me go back into Bitcoin. That was Ethereum. Here we go. This is Bitcoin. All right. That big order is gone. Oh, 59,947 partial. Okay, so they've taken some. Nah, it's gone. That 30 million is done. They've moved it. That's interesting. It's actually gone. Now, we had this yesterday, 4.2 million coming into play, and then we had 1.71. And then, look, we don't really have that much liquidity coming in here. 10 million at 62,500. But there is see, the thing is, what I look for when I look at this is I look at the concentration of how strong are the offers against the bids, right? Look at this. You see this whole area here. These are the offers. This is where they're selling the Bitcoin, all right? As retail's coming in and buying Bitcoin, this is who they're selling from. They're selling, institutional managers and traders and what have you are selling their Bitcoin into retailers who are buying, okay? And you see this big cluster right here where $28 million worth of BTC was sold at 63,500. Then we don't have anything else after that, all right? But we've got lots of commitment down here, which then makes me challenge the idea of where the liquidation points are. Look at all these long liquidations. You've got right now 310 long liquidations against 174 short liquidations. Hear me out with this, okay? Before you start thinking I'm bearish and all that madness, just hear me out with this, because you're applying logic with information that you don't know in the future. But this is what you do know. You know today that the Fed, wait a second, let me just change this. You know today that we have got data coming out from ECB President Lagarde speaking. She's going to be speaking today. Then you've got Powell speaking today. Powell's going to be talking to participating in a panel discussion titled Policy Panel at the ECB Forum on Central Banking, okay? Then you've got the Jolts job openings report. You've got the ADP. You've got unemployment claims. Lagarde speaking again. Then you've got the FOMC minutes on Wednesday, and then we have a bank holiday on the Thursday. In my opinion, these 2 days are going to be 2 days where they're going to really try and move price to where they want to move it so that they don't have to worry about price on the bank holiday, okay, because the markets will be closed. It does say that the actual stock market, US banks will be closed in observance of Independence Day, low liquidity and irregular volatility. It says here that most Forex brokers remain open because it's Forex. Stock markets and banks have a slightly different holiday schedules, which means that you only probably get half a day of trading as you do in the futures markets. So it's all going to be, we'll know exactly what that is as we get closer towards it, okay? And then, of course, you got parliamentary elections for the UK. All what you're witnessing here, guys, is all changes in fiscal policy. It's a big time in the marketplace. And when you understand that, that's going to be the determining factor as to whether or not Bitcoin is going to continue higher or not. Look, the hype behind the ETF itself, and up until the point when we actually got the ETF in January, which was over here, ETF, happy days, they went for the all-time high because that was what was going on here. Inflows of the Bitcoin ETF were just flying every single bloody week. It was going for madness. Now they've loaded up on the ETF itself, and now they're just sat there just holding on to it. It's truly behaving like a money market apparatus. They're just leaving it in there because they're assuming that Bitcoin doesn't have any volatility. As an ETF, this behavior right here is consistent with people feeling a little bit on edge because ETFs don't tend to move too much, especially when there is an economic turndown or there's going to be a change in policies which could impact investors' portfolios. So you've got to look at it and say to yourself, okay, then what do I know? Well, I know that we've got the election. I know that we've got a potential rate cut. I know that the euro's already had a rate cut, which is going to have an impact on the dollar itself, okay? Right? And data that could actually spike the dollar to the upside. I'm not even going to talk about what's going on with the Japanese yen. Look at that. This is dollar yen. And the word on the street is that the Japanese yen could be 170, 170. That is crazy. And if the yen keeps on going down, look at it. It's getting smacked. The dollar's only going to keep moving up. Volatility index is up for the day. Going into the NASDAQ and the S&P, you can see they're trailing at the highs. You've got earnings announcements coming out from companies, and estimates have been pricing in that these companies better perform well to suggest that this rally to the upside in the stock market is genuinely truth. There's truth behind it. But I've said it before. Bitcoin, in my opinion, could be the leading indicator. Because if the NASDAQ has made these significant all-time highs, back to back, every single week it's making new all-time highs, okay? And yet Bitcoin hasn't gone anywhere and it's staying sideways. Bitcoin could be the asset that we want to be focusing on, because even though it's a small market cap in comparison to the NASDAQ, it's still an expensive asset. And if we're seeing activity on Bitcoin to the downside, it would then make you think, hold on, NASDAQ's going up, because Bitcoin and the S&P have around 70% correlation. You're only going to assume that they're going to move in sync with each other at best of times, especially when everything is all good and money's being plowed into the stock market. You think it'd go into Bitcoin, but it's not going into Bitcoin. If anything, it's going into AI. Bitcoin is not AI. That's why a lot of guys in crypto are turning to AI token. Like, for example, let's just look at Render token. USDT, here we go. That thing has done relatively well, okay, if we actually look at it. But it hasn't really seen the success in the AI, because NVIDIA is AI. And investors in the stock market, it's like they're coming away from crypto, going into AI. Because we've got a big change in policy coming up soon, ladies and gentlemen. What happens in the next couple of months is going to dictate the economic expansion that the US is going to go through over the next year or so. So what's 2 months? You know? We're waiting for that September cut. And if we do not get that September cut, ladies and gentlemen, dollar's just going to keep on flying. And they're even talking about the potential for increasing the interest rates yet again. Yen will just collapse even lower. Euro will just shrink, all right? Pound will just take a shoe bag to the downside and just be completely wiped off, all right? Aussie Swiss will just keep on flying. Look at all the Aussie pairs. They're all holding out. They're waiting for something. And if you're in an investment that's not going anywhere, like I said, Bitcoin could be the true leading indicator for all of it. Look at the dollar, the US dollar against the Canadian dollar, trading sideways, right? Look at the US Swiss, trading sideways. Look at the dollar dominance itself. Where is it? Blimey now. Dollar dominance, sideways, right? Look at dollar yen, going up. Okay? And you're now asking yourself or suggesting that you are potentially in a bull market with Bitcoin. We hope we're in a bull market, but statistics are not saying that money's going into crypto because it's going into dollar. We know that's the case because the government is advertising 4.7 on the yields. The bonds market itself is sort of trading upwards. And there was even an article talking about if Trump does go into power, what impact will it have on the bonds market itself? And people are all, they're in two minds about it. Is it a good thing? Is it a bad thing? Yeah, Trump borrowed a lot of money back in the day when he was in power, but he was putting that money to work because, look at MicroStrategy. I've said it before. MicroStrategy goes and borrows loads of money so it can buy Bitcoin. It's how you put it to work. But then people will say that Trump's actually... Listen, this is opinion, okay? It's nothing political. It's just to get you to understand how likely investors are going to be committing liquidity in the biggest marketplace in the world, the bonds market, $137 trillion marketplace. And if money's not going into the bonds, it then means it's going into cash. Then that means it's going to be a bit of a problem for Bitcoin to keep on moving up. You must be thinking about this. Why hasn't Bitcoin made significant moves to the upside? They're accumulating, Tino. I hope that's the case. But when you've got accumulation in Bitcoin on the back of a strong dollar, you want the dollar to be used and transact on the dollar. That means you sell dollars to buy Bitcoin. Doesn't look like that's happening. Now, data coming out could be the deciding factor for that. That's what investors are looking for. They're looking for that transition. And it's only going to be once the dollar itself gets the rate cut. That's what I think. Once the elections are done, then we're going to be in that same story. Market is open now. Yes, the market is open. What? Yeah, Berkshire Hathaway, yeah, they are sitting on $189 billion. What do you think about that? I think that is exactly what I think about that. Why are you sat in $189 billion worth of cash? You won't go to the government bonds. You won't go to the government bonds. Even though the government bonds are deemed as low risk, why is Berkshire Hathaway sat in cash? $189 billion. They're going to be putting that to work. Don't get it twisted. Election, interest rates. So if you're a holder in Bitcoin, you need to wait for those two events and don't get too excited about a couple of grand move in Bitcoin, like 2-3 grand. You're not in it for a 2-3 grand movement in Bitcoin. You're holding on to the 100K. You're holding on to the 150. You're holding on to the idea that the supply of Bitcoin is going to be reduced, which means that your Bitcoin becomes more and more valuable. You're in it for that. I know. The biggest transition in the markets is about to unfold. Again, Bitcoin is, in my opinion, could be the leading indicator to suggest that investors are waiting. Playing this, Bitcoin could come up to this point, it comes back down. It's a spot trader's scalping paradise. Because they won't take the all-time high again because you've got elections coming into play. They won't allow it to go down below 50K because you've got elections coming into play. It tells you that investors are neither here nor there. You got Mt. Gox, they're going to get rid of their Bitcoin, 4 billion. What is that? Let's just be honest now, ladies and gentlemen, 4 billion Bitcoin. Let me just show you what's going off over here. You've got, where is it? Have we seen any big sales coming into play over here? Not so much, but you've seen this before. This is the futures volume, okay, on Bitcoin and Ethereum. You can see 51 million, 91 million, 147 million, 44 million right there. And then we go into spot, which is 3.92, 40 million. What I'm saying to you is futures volumes will always dictate what spot is going to be doing. That's the truth. Because if you've got nearly a billion, say you got nearly like 600 million, let's say like 400 million in orders, okay, buy orders on the futures markets, right? Someone on spot's going to see that with Bitcoin moving to the upside. Big green vector candle, happy days. Yeah, baby, let's just go and have a look. And they'll look at their charts and be like, oh my God, Bitcoin is moving up, it's moving up. Yeah, I'm going to start buying spot. That's why all the guys end up buying spot and they end up saying, right, I bought at the wrong time. I bought at 71. Because they're buying at these significant highs all the way up here because they're being given a reason to believe that it's now time to buy because Bitcoin's moving up. Holders, I know you're not in crypto for these silly little moves. These little moves right here, $1,000 moves, 3%, you're not in it for that. I know that. Day traders, different story. This is their bread and butter. Okay? You've got this pending ETF that's going to come into play with Ethereum. That would explain why Ethereum is probably trading sideways. Look, Ethereum price action has been horrible. It's not gone anywhere. We only had this pump up over the weekend on the back of Solana. And Solana's been doing pretty well, to say the least, but she had her ETF hype. And did you pay yourselves? Hopefully you did. It's all macro. When we truly get into the bull run, they're going to pick it up at a discount first. They're going to go for the discount. Challenge me. Challenge me right now and tell me if you think Bitcoin is cheap enough. Don't give me, Bitcoin ain't at 100K, so it's cheap enough. Don't do that. That's wrong. It's the worst way to see something. The way for you to look at it is to say, what price is someone buying it at now? 62,768 is what someone is prepared to pay for it. Okay? That's what Bitcoin is. Yeah, but Tina, if I buy at 62,700, right? And Bitcoin goes to 100K, Don't tell me how you feel if Bitcoin were to go to 100K when you buy it at 62. That's not trading. That's not investing. That's just hoping for the best. The way to look at it is, what big thing is coming into the market? Election and interest rates. Have they happened? No. Does that mean you should be buying? Some of you might want to take the stab. Some of you might be doing some DCA. We anticipate that DCA, on the bigger picture of things, ladies and gentlemen, just put things into perspective. We anticipate that DCA goes on the idea of this. Bitcoin moves up. Yeah, baby. It comes down. Load up DCA, baby. Up she goes. Yeah, man. That's my Bitcoin right there. Yeah, baby. Oh, it comes back down again. Load up, load up, load up. Because we're in a trend, man. We're in the bull run. Doesn't matter. Just pick up as much of it as you can. Yippee-ki-yay. The same guys who did that when Bitcoin kept on going up, talking about the DCA, were doing exactly the same thing when Bitcoin was dropping. You're averaging down when you're doing DCA. When the markets are going down. You are. You might be picking it up cheaper. But are you a wealth fund manager? Do you have deep pockets? Can you absorb the drawdown? Because every purchase that you make is in the hope that Bitcoin will reverse. And then you see these little exciting moves right here. Yeah, man. DCA, baby, DCA, load up. I know people were saying DCA at this point because it's going to go back up. Well, came down again. So the DCA guys are having a hard time. We're not in a trend bull markets per se. All right? Because we've got too many macros that can impact the rallies. That's why bull markets are progressive. Look at this bull market. This was the bull market from here all the way up. And it happened over a period of time. Notice how the climb was nice and slow. This, ladies and gentlemen, is true DCA because you're buying it cheaper as you're in a trend and it's going up. It's going up in value. You have more confidence when you're doing that. But when you're doing DCA at the highs, on the idea that that is the point that Bitcoin's going to move from, because that could be the case, ladies and gentlemen. Bitcoin can go up from here. That is something we need to take into consideration. But look at where we are macroeconomically speaking. You can see it's having an impact on things. And if they're not cutting interest rates, okay? If they don't cut it, dollar wins. I can get more dollars now. I can get a valuable dollar. I can go to the government bonds. I'm not going to take on risk because the dollar, I want to put my money to work. And then I'm going to wait and see when the dollar gets so appreciative that I can now go and buy more Bitcoin. I can go and buy more euros. Dollar then corrects. The impact of rate cuts come into play. We got the new president, happy days, and it starts another bull run. That's just my opinion. You know? It's not factual, but I'm using facts of the market. Interest rates, yields, bonds, the fattest market caps that you pay attention to are going to dictate what everyone else is going to do. And in my opinion, that's it. I'm not watching Jerome speaking right now. No, I'm not. Tino, monetary expansion equals plus 7% per year. So Bitcoin ROI will be a best bet. So don't care if the price, I'll pay for it. See, there you go. That's someone that's in for Bitcoin, okay? But not everyone in cryptocurrency has the same mentality. There are people that are buying Bitcoin with the intention to sell it at some point. They want to make some money off it, okay? The thing is, unless you picked up Bitcoin at $10 or even 10 cents and you hold 6,000 Bitcoin, even if you were to buy it now, it wouldn't matter to you because you're sat on the stack. Remember, MicroStrategy is using Bitcoin as leverage. Okay? That's why they keep on buying it, to increase their leverage. and whatever things they're doing to put that money to work, well, happy days. But not everyone shares the same logic. You got the guys in it for the tech. That means they don't look at charts. They're just happy with Bitcoin. I want to hold Bitcoin. Cool. And there is a scope in the future where they're like, I think Bitcoin's going, I'm leaving it there. I plan on selling this in 10 years' time anyway, so it's no interest to me. I don't care what price it is. It could be 50 grand. It could be 100 grand. It doesn't matter to me. I'm just going to pick it up. Then you've got the guys. Those guys that I just said, they're not in it for the tech. They're collectors. That's what they are. If you're in cryptocurrency to make money, you can't have the mentality of a collector. Straight up. You won't be able to. But if you're in it to make money, then whatever moves Bitcoin makes, a move from 62,900 to 80,000 as a spot trade, well, congratulations. You caught yourself a nice move. That 20 grand move. But the same move from 80 to 100 is exactly the same amount. Still making money. The collector sees it differently. And that's what I think they are. There are guys in crypto who see cryptocurrency as collecting. That's all you're doing. You've got the collector's mentality. Like going Pokemon cards. You know why they go for the millions? Because even the guys, they too have a price. They have a price. Everyone or anyone that collects something that is worth value, they will always have the price. There's always a price. They just haven't met the person that's willing to pay it. I hope that makes sense to you all, ladies and gentlemen. Got to catch them all, he says it. Nah, my Pokemon collection. I have no Pokemon collection. Right, listen. The news is coming up very shortly, ladies and gentlemen. Okay, Powell doesn't seem to be really doing too much in the marketplace. Let me just go and have a look at the NASDAQ and the S&P for a second. NASDAQ, yeah, it's looking, yeah, it's just a big, bold move up, but that was from earlier on anyway. Don't trust it at all. Jolts job openings is what they're going to be looking for as well. And that's going to be something of interest. And then we get it all started off with the ADP non-farm employment change. Okay. So, ladies and gentlemen, with that being said, mad love and respect. I hope you've enjoyed today's live stream. Be sure to like and subscribe. And sorry it's been so long. All right. Take care of yourselves, gang. Have a great day. Peace.